Okay, recording this video Monday 28th of May 2012. Hope you're enjoying your long weekend. It's Memorial Day weekend, so we get a little bit of a rest from the markets. And I've not posted a video on the website since last Monday, and the reason for that is the site has just been migrated across to a new hosting service. Hopefully the site will now be a lot faster. Still not got all the bugs kind of worked out of the system. You know, in this day and age, migrating an 800 plus page website across to a new hosting service is kind of fraught with danger. It's kind of a bunch of kind of problems kind of got thrown up, and they needed to get fixed, and they're still not all fixed. Just a couple of notes. First of all, the contact form is still broken, so yay from me, but you know, for some of you that might be a problem, so apologies. That'll get fixed ASAP. And some of the recommended links are also kind of still down, so those will get fixed in due course, but just bear with me. The positive is, you know, the site should be a lot faster to run and to get around, and that for me was becoming, particularly from here in Sydney, Australia, was becoming a real problem. It's getting extremely slow to load pages, so that will get better, and there are still some bells and whistles to be switched on the new hosting service, so it should get better. Anyway, enough of that, let's get to the charts. Now, last week's activity, so we kind of closed up at 1314. This 1300 and 1290 level is extremely important. We got a little bit of a bounce kind of going on, and I'll show you why I think that's the case, but I just think that, you know, this is an important. We've had pullback to end of trend. We're now in a downtrend on the daily time frame, so any kind of retracements, any kind of bounces, from my perspective, are very kind of suspect, and I'll show you through a whole bunch of charts just showing why I think we're in a totally different, we're in a downtrend now, and all the markets are kind of heading down. So we will get bounces along the way, and I think that's what we had this week. Effectively, these 5 days that we had, 1, 2, 3, 4, 5, starting off with Monday's kind of you know, red bar with you know, kind of a good deal of buying happening there. This was just, you know, as the volume kind of tails off, you can see that was just a low volume kind of retracement going on. On the weekly chart here, you know, we've had 3 weeks of kind of extreme selling kind of down here, and this is the little bounce that we got in this last week. It was fairly muted. I suppose just looking at this chart, we have kind of bounced at a level that previously was resistance and turn into support, so I'm not sure how far this bounce will go, but as I said, I think, you know, on a whole bunch of charts we're now into downtrends, and so, you know, any kind of retracements are suspect. On the longer term tip frame charts, the 40,500 tip bar chart, so this is the little bounce that we've got going on at the moment. Just opened up Sunday evening in the US. We bounced up to 23, but with the activity Friday, Thursday, Wednesday, Tuesday, Monday, so this is the Monday, the bounce we got on Monday is because, you know, we've put in enough exhaustion selling bullish divergence patterns kind of come in here, pull back to dirty end of trend, and that's why we're bouncing from here. You know, this is the mirror image, if you like, at the top up here at the 14 teens, pull back to end of trend, then we had our flush patterns kind of come in, and we kind of raced down from here. The retracement that we had here was exhaustion buying, bearish divergence kind of comes in, and that's just selling that retracement, and we kind of come down, and we didn't get this pullback to end of trend pattern until we'd had exhaustion selling happening here during these last couple of days, and we kind of bounced from there. So that's why we're getting a little bit of a bounce, and it's similar on the 45-minute chart. You can see we've had pullback to end of trend that went off on Wednesday here, the end of trend signal here with a flush signal, bullish divergence kind of come in here. We're playing around with these levels, so I think we'll have a little bit of a bounce back up, but yeah, I don't think it'll go too far, and then we'll kind of turn around and head down. And the reason for that is the 135-minute chart, we got pullback to end of trend to make on this time frame. I mean, it's possible that we'll just kind of hold here, go through the pullback level. We've done enough damage on the downside with exhaustion selling bullish divergence, and that level just gets broken, and we just head to the upside. Yeah, Monday's activity, because it's you know, the markets effectively will be low volume at best. You know, will be a little bit suspect. So let's see what happens on Tuesday. But you know, in terms of, you know, this trend, there's the pullback to end of trend bearish divergence signal up here, just like the 40,500 tip bar chart that we've kind of come down here. So on the tip bar chart, we've kind of put in those dirty end of trend signals. We're not on this time frame here on the 135-minute chart. So you know, kind of wait and see. In terms of the bigger picture on the daily time frame, we're through support here. You know, we put in all this effort into exhaustion buying, bearish divergence, pullback to end of trend, finally kind of come out with an amateur bars up here. just on this test, bang, we've kind of sold off. So this initial selling to this point here is exhaustion selling, and we're now below support on the daily time frame. So we're in a downtrend here on this daily time frame, and that means these kind of rallies should be fairly weak and should be, you know, looking to get short or out of long positions certainly. You know, psychologically, I think what's happened in the last several weeks is finally, you know, the two kind of positives in the market were Apple and the Facebook IPO. You know, the expectations of looking out at that, and I think finally, you know, well, Facebook, we know that was a kind of complete disaster. And from the retail market's perspective, if we'd had a doubling of Facebook in the next, you know, 2 weeks after IPO, there'd have been a huge psychological, yeah, let's get into the next IPO, and you know, we're back into equities and this is all exciting and good. But they're down 30% on, you know, kind of IPOs. So, and there's all kind of lawsuits, criticism of NASDAQ, and you know, the retail markets just said, oh, to hell with it, you know, that's the end. I'm not interested in chasing the stock market anymore. I'm down X% on my portfolio, and this was an utter disaster, and you know, I'm just being taken for a ride here. So I think psychologically that has a real big impact. There's no retail money that's going to be running into stocks right now. And then Apple here, I've always said that the next turn on the Apple chart is really important. So we've had pullback level, we had all this exhaustion buying, bearish divergence, flush pattern here right at the highs up at the 640s, and we kind of this was you know, selling short, really getting on board this move. The professionals just selling into that, and then any retracement back, it was kind of amateur bars here, and this retracement came through the pullback levels. So this next cyclical resistance level will be a dirty end of trend where this goes off, but I think we've still got a few days kind of strength in here until that level kind of comes in, and then after that I think psychologically that's a really important level. So you know, all of a sudden people are thinking, well, you know, is Apple going to come back up? I mean, we've come down quite a ways on Apple, so is it going to kind of come back up? And if it starts to break through these lows here and kind of you know, really confirm this end of this uptrend move, then all of a sudden, you know, kind of the psychology of the market kind of changes really dramatically. Now this week, I think what was happening in the currencies, I think, was really important. Last video I had up on Monday was just talking about euro. Euro chart was holding at the support level here at 127. We had these blue professional bars, and I was talking about how we'd had professionals kind of hold at that level kind of previously here. We kind of raced away into a little bit of an uptrend. There's a bit of short covering rally effectively, that volume kind of buying in here, and then we ran out of steam with a flush pattern, and then these resistance lines kind of come in here and here, and we've just fallen through the ice on the daily chart here. Blue professional bar falling through support like this, that's falling through the ice. So all of a sudden, you know, people realize, you know, the problems in Europe are real, and you know, the solutions are not easy at all. And can the politicians actually kind of get this together before causing, you know, we've got a bank run happening in Europe. It's like no one's talking about it, but, well, no one in the mainstream media really is talking about it. We have a bank run happening in Europe, and this could cause, you know, all the financial institutions huge problems. Anyway, so that's falling through the ice, and yeah, we've not had an exhaustion selling signal kind of come up here, but these levels, the selling levels here, are pretty extreme. And because we're falling through a daily support level here, this has got to come to a pullback to end of trend scenario. It could get caught on the next highest time frame, on the weekly time frame, but I think on the weekly chart we're kind of, well, coming up to a support level here. But that for me was a really important level kind of here. When we look at the flip side, which is dollar index, you can see what's been happening here. Now, I've been bullish on the dollar index since June of last year, and the reason for that was we had a lot of kind of commitment of traders, kind of bullish divergence signals come across too. But the activity that we had with this week, previously, last week, we had, this is like a gathering pattern here, whole bunch of blue professional bars underneath the previous resistance level here, kind of getting ready for a breakaway move, and that move there with that professional large range up bar is kind of jumping the creek through here. And with now, with this week's activity, we basically kind of moved through a resistance level here into an uptrend. So and it wasn't kind of blue professional bars kind of taking profits kind of at these highs. This was actually kind of getting this move going. So we've got, you know, we've got a run on the euro, and it's running into a dollar index, and to some extent into you know safety of bonds, but this is an important kind of capital flow kind of going on. And if you look at how the commitment of traders, professionals are positioned now, you can see kind of what's going on. Dollar index, you can see here we've got continued support by the professionals. I suppose this is a little bit weaker than I'd like. I'd like to see this reading on commitment of traders a little bit higher. Don't want to see that in terms of a bearish divergence kind of signal kind of lining up. But when you put it in context of the other markets, you can see there's a lot more kind of confirmation here. So that's it's good, but it's not great. In terms of this is 30-year bonds, so we've got the commitment of traders following this move up. Now what I do, I flip the commitment of traders numbers upside down, because I find that by doing that you get a better sense of it follows the trend in the market. So we had these bullish divergence signals kind of here, and we've kind of broken to new highs, and the commitment of traders is following along here. On the Aussie dollar, now this is really important. Aussie dollar, I'd said it a couple of weeks ago, 108 and 110 were kind of highs, and the parity with the US dollar was an extremely important number. Well, this last week we fell through that. The last couple of weeks we've fallen through parity on the Aussie dollar here, and now all of a sudden you look where the professionals are positioned here. Negative reading. The last time we had a negative reading in the Aussie dollar was back in 2008 during the crisis, and this was where all the money kind of ran into the US dollar and out of kind of risk-on markets. And the last time that we went kind of negative was midway through this move here. This move was about 82, 83 down to almost 50 cents. Now copper here again, very dependent on kind of global growth, and we've got a very negative reading here on the commitment of traders numbers kind of as it's rolled over. So making kind of new lows here on commitment of traders on copper. And here's euro. So euro negative 63 kind of here as we broke through those lows. When you looked at those readings, that reading is actually more negative than the previous lows. So again, no bullish divergence kind of coming in there as we're making new lows. So that's not kind of positive at all. And then S&P commitment of traders numbers here were down -8. Doesn't look like any kind of bullish divergence patterns kind of setting up here. And what we had a couple of weeks ago was a crash warning signal on the S&P commitment of traders numbers. So extremely important there. So there we go. I think that's all I've got to say today. Hope you're enjoying your weekend. I think we will get a little bit of a bounce for a few days, but my kind of longer term charts, I'm seeing we're in a downtrend. So let's wait and see where Apple ends up. Let's see what happens to Facebook. Facebook could bounce for a few days until it kind of comes into a resistance point where the professionals say, yeah, it's far enough. I'm kind of getting out of Facebook, getting short on Facebook. So there we go. That's what I see on the charts, and hope you're enjoying a long weekend.